bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
This is BloombergQuint Live, and I'm Menaka Doshi.
You're watching Indian Open. I'm Nirajan. Good morning, Menka. Good morning, Ira.
Good morning, and good morning to all of our viewers. These are our headlines this Friday morning. Donald Trump picks Jerome Powell as the candidate to replace Janet Yellen as the chair of the U.S. Federal Reserve. Markets unmoved by the announcement. The possibility of OPEC members agreeing to extend supply cuts sent crude prices higher in U.S. trade, flat trade in Asia this morning. Positive news for Bharat Forge and Ramakrishna Forgings. Multi-axle truck sales more than doubled in the US last month. The iPhone X hits the stores. Apple lovers queue up to get their hands on it.
Yeah, but I think all three of us are staying put with our phones.
It's over a lakh. We'll know the final pricing later today, but my gosh, I'm still too middle class to think of spending that kind of money on a phone. Like, to me, like 30,000 rupees is a lot. No?
Yeah, well,
have you secretly booked the iPhone X?
No, I haven't.
You're not saying anything.
I haven't.
Okay.
Yes, very pricing is a little too high.
Okay, but is the valuation too high for our markets? Well, that may be the voice coming in from almost all of our key market experts. But what happened to the trade for the day, or what could happen to the trade of day today? Let's quickly bring up the trade setup. It was a deceptively quiet day of trade, and I use the term deceptively with a reason, because the headline numbers yesterday showed that the index didn't go anywhere. But on the index itself, you had stocks which had moved 4 or 5% on an intraday basis. So it was a deceptively quiet headline number, but extremely volatile within that. The broader markets even more so. A bunch of stocks moving around, and that's been the norm for the last 1 month, I would reckon. We now had 6% gains for the Nifty, about 8% for the mid caps, and about 10% for the PSE small cap index. That just shows the kind of returns that certain participants are baking in for promising stories or rumors or whatever. I mean, just look at the 1 month returns for 3 or 4 names that I pulled out. 8K miles in 1 month has delivered 126% returns. I mean, that's nothing to scoff at. HEG 87, Ramki Infra 85, Butterfly Gandhimati 82% returns. And there's a clutch of names which have given over 50% returns in 1 month. I'm not talking about the year, 1 month. So that just shows the kind of strength that is there at the broader end of the spectrum. Whether it lasts on or remains to be seen. In today's session, though, we'll start off on a slightly quiet note, taking the handover from global markets. But it'll be anything but quiet at open for a bunch of stocks as well. Lots of newsmakers, lots of results in addition to the global news flow that we're talking about. I know nothing will compare to the Bitcoin a bit that we'll talk a bit later on in the show. But hey, look at these stocks. Vedanta, results were below estimates, volumes, margins compressed. But as we've seen with a bunch of other commodity names, you don't quite know whether the stocks will react duly or whether they'll move up. So watch out for Vedanta. Hindalco, you could fairly assume would do well because Novelis posted a good volume quarter. They've raised the guidance more importantly. So it'll be a very, very interesting day of trade for Hindalco. Bharat Forge, and month on month we continue to get surprised. Every time we think, okay, this is it. Now how can these numbers surprise us? But the Class 8 truck sales for October up 62% over last quarter, 161% on a YOY basis. These are strong numbers, and that should keep Bharat Forge excited in trade today in all probability. Then Unichem Labs, remember media reports across the newspapers, we've seen this report of how Torrent may get into Unichem, so this could be an interesting one. And then I just picked up two names out of the plethora of names that have come out with numbers. A lot of green on the screen today in terms of the earnings heat map. But I picked up two numbers which have come out with really smart results. HEG, revenues up 100%, EBITDA up 900%. The stock has had a run up, of course, 87% in 1 month, kind of prices in some of that, but let's wait and watch. And Himadri Chemicals, one more company with supplies to electric vehicles. This one, up, revenues up 37%, EBITDA up 83%. So a couple of names which could react to numbers as well.
All right, while you do your market setup, you can't ignore what's going on with commodity prices, especially crude. So we've got Brent trading above that $60 a barrel mark. WTI somewhere around 54 or 55. It isn't as much this move over the last 2 days, but just the move over the last 2 months. Yes. That's interesting to watch closely. And let's get an expert voice on what's going on with crude prices. We've got with us on the phone Daniel Hines. He's senior commodity strategist at ANZ Research. Daniel, good morning. Thank you very much for joining us here on BloombergQuint. What do you make of this continuous rise that we've seen in crude prices? Of course, on the back of continuing talks of that production cut with OPEC, Russia pitching in. And do you see this rise as a sustained one?
Yeah, we've certainly seen a structural step up over the past few weeks. I think that has certainly been driven by the talk of that production cut agreement being extended. The market had been obviously worried about what would happen once those restrictions were eased in the first quarter of next year, and I think the talk around particularly Saudi Arabia and Russia around extending that for a further 9 months has really, I suppose, increased the positive sentiment around the oil market for 2018, early part of that in particular. So I think that's certainly been a big reason behind the increase that we've seen over the past few weeks.
And do you expect that this will continue over the next few months? So what's your price target, if I may ask, on crude prices in the near term?
Yeah, no, we think it can certainly establish itself, certainly Brent above the $60 a barrel mark now. We certainly are taking obviously the words of OPEC on face value and expect that extension to come through. But we are also seeing signs of I suppose falling growth in US output as well, and I think that is certainly helping paint a much better picture in 2018. So on the back of that, as well as much better than expected demand, I mean we can certainly see prices in the mid-60s over the next few months.
And you don't think 70 is likely as well as we go into the winter heating season, etc., across the world?
I mean, I wouldn't rule it out in over a short period, but I think it'll be difficult to sustain, over a longer period. Just, I suppose, due to the market's, I suppose, cautiousness around what that would mean, obviously, for the higher cost supply that's obviously waiting in the wings to hit the market once prices do rise.
All right, we'll leave it there. Daniel, thank you so much for that quick update this morning. Structural shift, as he calls it, a little bit of it also temporary as we see some cutback in US stockpiles. And we'll probably continue to see that being volatile through the course of the winter season. But structural shift, as Daniel calls it. So get ready for crude at between $60 to $70.
All right, that's the crude oil prices. Let's get into what we're discussing on First Word today. The new Federal Reserve Chairman, Jerome Powell, the Bank of England's rate hike, and the big but slow unwind after a decade of ultra-easy monetary policy. The Bitcoin rally, it's unstoppable. $7,000 taken out. What does it mean for some of the other cryptocurrencies that have made it into the markets? We get a special report. And we take a look at rural finance firms. Are conditions on the ground back to normal after a year of volatility?
Okay, we're starting it off with the most expected announcement of the last 48 hours. Jerome Powell?
Yeah.
Okay. So just to remind you that President Donald Trump stuck to script last night. He said he would nominate Jerome Powell to be the next chairperson of the U.S. Federal Reserve when Janet Yellen's term ends in February next year. He also said that Powell has won the respect of his colleagues at the central bank. Powell is currently the governor of the Federal Reserve, and he's also won the confidence of members of Congress for his judgment and his intelligence. And on his part, Jerome Powell promised to work towards improving the health of the U.S. economy in the long-standing tradition of monetary policy independence. Now, listen in to what Powell had to say at the ceremony yesterday.
I've had the great privilege of serving under Chairman Bernanke and Chair Yellen, who guided the economy with insight and courage through difficult times while moving monetary policy toward greater transparency and predictability. Each of them embodies the highest ideals of public service, unquestioned integrity, and unflinching commitment to fulfilling our mandate. Inside the Federal Reserve, we understand that monetary policy decisions matter for American families and communities. I strongly share that sense of mission, and I'm committed to making decisions with objectivity, based on the best available evidence, in the long-standing tradition of monetary policy independence.
All right, but the Fed was not the only central bank in the news last evening. Bank of England raised interest rates for the first time in a decade. Led by Governor Mark Carney, the Monetary Policy Committee voted 7-2 in favor of a rate hike. The move removes the emergency stimulus introduced after UK voted to exit from the European Union. The pound, however, slumped after the commentary accompanying the rate hike suggested that from here on, any more rate hikes could be still some time away. This is in line with what we have seen across major central banks. A slow and extended withdrawal of monetary policy accommodation is what appears to lie ahead.
And really, that is the hallmark of November, December. We had anticipated that November, December would be the beginning of the great unwind as the Fed starts shrinking its balance sheet. Draghi has said that starting next year, they will reduce bond buying, by the ECB. And now finally, you have the third, important central bank join this hangover, because I can't call it a party, and say that, we've hiked rates. And while he's been very cautious and dovish,
they've all been very cautious.
Yeah.
I think, from the Fed, which has continued to say that this will be a very slow
gradual
process, the unwind, to the ECB, which has, done what was expected from 60 to 30 billion euros, but then has said it is an open-ended program. And Mark Carney's comments overnight were also largely, interpreted to suggest that from here on, rate hikes will be slow. So I think, yes, the unwind has begun, slow unwind, and that's perhaps one reason why we're not seeing any disruption in the markets, and perhaps one reason why they're sequencing it this way. I think Fed central bankers have learned how disruptive financial market turbulence can be. So they have been very careful to sort of prepare the markets for this. Again, the purists would say that the central bank should not be reacting to the markets, but there is a lot of merit in ensuring that there isn't turbulence and disruption in the markets, because that just pushes the process back.
I just wanted to add a couple of points there. I think two important banks that have not yet joined this, sort of great unwind, if we want to call it that, which is Bank of Japan, where Governor Kuroda has said that he's going to continue with the stimulus program, till inflation hits 2%, which is the target across most of these developed economies, and the Bank of the PBOC, the People's Bank of China, where we don't really know what the directional moves will be this next year onwards. You add to that, so we've got three Western banks doing this, two Eastern banks sort of on the fence as yet. And then I think we've got three big changes in terms of governors themselves, right? The PBOC governor will change next year. The Fed governor is changing. And isn't Carney also expected to be replaced over the course of the next year?
I don't know exactly what his date is, but it's a while away. Yeah, I think the Bank of Japan is on a different trajectory. So yes, that liquidity push, rush will perhaps continue. On the Chinese side, yes, I think their policies are far more internal and have far less impact on global markets than some of these other central banks do. But that's where it stands right now.
Yeah. The only elephant in the room, if you will, it's probably not an elephant in the room, is one thing to prepare the markets and the markets being prepared for an event, and quite another to actually live in the event, even though it's a fairly extended, elongated event, as you said, and the markets are prepared for it. I think November and December in that ways will be very, very interesting, because heightened rates plus taper, both of them kind of take shape and form November, December, and it'll be interesting.
It's not even November and December. It's not about these 2 months. I mean, it is about a period of time as liquidity conditions change. What is the impact on rates? In the US, it's going to perhaps start with the mortgage rates. And you're obviously very, very closely watching, the bond yields in the US. And so far, they haven't moved up to uncomfortable levels. So I don't think it's about the month in which it is announced or when it starts. It is as this gradual process of unwind plays out. Where does it impact? It is difficult to believe that it will impact nowhere. It has to impact somewhere. So as that plays out through the markets.
Just look at the numbers, right? $2.3 trillion pushed in by the ECB, $3.6 trillion put in by the Fed. That's over $6 trillion that over the course of the next few years will slowly, start coming off the markets. And I think if we have that chart ready, which will show you what the balance sheets of all three important Western central banks look like, that will give you a sense of how elevated it is right now. So that for you is the Fed, the BOE and the ECB, the Fed being the blue line there. And I think critical to note, as Hira pointed out, that this isn't about a 1 month or 2 month or 6 month thing. What it structurally does to money supply across the world, and that's going to be key to watch and most interesting to watch, because unprecedented in the world, unprecedented.
So it'll be important to see the reactions. Where in the first 2 months, all I meant was that it'll be interesting to see whether the markets react to it in the first couple of months itself. Obviously, the next 12, 24 months are probably...
I'm reading a Bloomberg article. It's on our site, so those of you who want can go to BloombergQuint.com and read it. And it estimates that there will be about $50 billion a month taken out of just the U.S. System, the economy, because of the Fed allowing for bonds to mature and sell off. So I think $50 billion a month coming off is no small change.
Yes, it isn't.
Well.
Right, just like the rest of the world, we're all watching what's happening on the central bank side, but we're also watching what's happening on Bitcoin. Surge past $7,000 for the first time yesterday, breaching another milestone less than 1 month after it tore through the $5,000 mark. Now, we are no experts on Bitcoin. We don't know what's really going on there and on that currency. We have some of that Bitcoin mania happening in India. But this morning, Camilla Russo is joining us from New York, telling us about what the buzz around the cryptocurrency is and what explains this unstoppable rally.
Bitcoin touched $7,000 today for the first time ever. It got to almost $7,400. In a rally that seems to be unstoppable. It's up more than 600% this year. And this is all, the most recent news is on the CME announcement that it plans to start offering Bitcoin futures by the end of the year. So this just lends more credibility to the sector, and it allows investors to hedge a very risky investment. So the speculation is that more institutional money will start flowing into this nascent asset class. And just in general, we've seen investors slowly coming into this investment. There have been more than 100 hedge funds based on cryptocurrency investments opened in the past 2 years. That's an explosive growth. Today we saw Goldman Sachs CEO Lloyd Blankfein say that he's open to Bitcoin even though he's not investing in it. So in general, we're seeing tons of attention in the sector and greater acceptance.
Well, that's interesting. 100 hedge funds in the last couple of years focused on cryptocurrencies. Camilla, what has this meant for not just Bitcoin, but the other cryptocurrencies? Because while Bitcoin has seen this crazy rally, have the others been able to tap this demand? Are there others that we should watch out for?
In general, there has been a surge in interest in the sector, with hundreds of digital tokens springing up this year, especially with the initial coin offerings craze that's going on. But lately, Bitcoin has really taken the spotlight. After getting to lower than 50% of total market cap earlier this year, it's now back up to 60% of total market cap in the cryptocurrency market. So this last couple of months, the rally has really been in Bitcoin, as maybe some people are switching from the smaller digital tokens into Bitcoin, which is being considered digital gold or the safe haven in this sector, even if it still remains very, very risky. So Bitcoin is still king right now.
All right, that's the Bitcoin story playing out. I think we switch focus to something entirely.
Well, like you said, like no expert here, right, to comment on Bitcoin in any fashion.
Here. The only thing we do know is that there are a whole bunch of these initial coin offerings even popping up in India.
Yeah, the ICOs as they're called.
And advise huge amounts of caution for any investor wanting to go into these initial coin offerings.
Yeah, I guess difficult to value.
Difficult to understand. Difficult to know what's underlying it.
Yes.
I think you have to be 22 years old to get this, right?
Or 18 or 16.
I don't get it.
Yeah.
True. Switching to something entirely different, it could not be more diametrically opposite to the Bitcoin. This is the not brick and mortar, but the absolute ground business of rural finance. Now, we've had a year of volatility in rural finance because demonetization hit the sector in a number of ways. In the early days, they saw collections surge because cash was coming in. Then they saw delinquency starting to rise. So there's been a lot of volatility. Just looking through some of the earnings that have come out in this sector to try and understand what's really going on and whether we are back to status quo, whether things are back to normal. I'm not looking at the profit numbers. All of our viewers are aware of those profit numbers. I'm looking at some of the operational metrics which tell you what's happening on the ground. So if you look at Ujjivan Financial, for instance, which reported numbers yesterday, their gross loan book has started to grow once again on a quarter-on-quarter sequential basis, but it's far slower growth than what you had seen in the past. On a year-on-year basis, also there has been a marginal growth in the gross loan book. Disbursements are up quarter-on-quarter, but they're still down on a year-on-year basis. But then last year, before the demonetization hit, disbursements were growing quite rapidly across the sector. In the group loans and the micro-individual loans business in particular, disbursements are significantly lower on a year-on-year basis, which probably suggests that the management is treading cautious, on this particular segment. They're also rebalancing their books, so you have to keep in mind that some of these are transitioning from pure microfinance companies into small finance banks, so they're rebalancing their books a little bit as well. Collection efficiency is what everybody was watching. So at least at Ujjivan, collection efficiency is back at 99.7%. Gross NPAs are down to 4.99% compared to 6.16%, and their provision coverage ratio is healthy at about 73.4%. This is Ujjivan, which reported yesterday. If you look at Equitas, another microfinance company which transferred into being a small finance bank, for them, assets under management, as they reported, were up 4% quarter-on-quarter and about 3.5% on a year-on-year basis. Disbursements, again, were up quarter-on-quarter but were down year-on-year, making the same point that I did with Ujjivan, that growth levels, at least across some of these larger companies, have come off. Gross NPAs in Equitas's case did not come down, in fact, have gone up, 576 compared to 4.91% in the previous quarter. They did, in their commentary, though, say that the MFI segment is improving. Their quarterly collections are at about 94.5%, but still not back at pre-demonetization levels. Bharat Financial, which reported earlier in the quarter, their cross-loan portfolio was up 10% quarter-on-quarter, also saw 17% year-on-year growth. Disbursement growth was at 15% quarter-on-quarter. Net NPAs have come off, and collection efficiency is back at pre-demonetization levels. So it looks broadly that the sector is certainly looking far healthier than it was for the last 3 odd quarters. Some individual variations in between, in sector to sector, like for instance, Equitas has far more exposure in Maharashtra, so there's been perhaps a little bit more trouble there. Some of the other guys who are more diversified are probably back to square one in terms of at least collection efficiencies. And if they're moderating some of their disbursement growth, I think that's good news because the sector was growing quite rapidly. But just on asset quality and on collection efficiency, most of them seem to be back to where they were before demonetization hit.
Haven't been able to, 2 out of 3 haven't been able to reduce bad loans substantially, is it?
They have. I mean, so 4.99 for Ujjivan compared to 6. That's not a bad number. Equitas is still up. Bharat Financial is down to 5.2 versus 6. So they have.
So gradually improving the quality of the book.
There's been a period of pain, though, and as you said, I think in your chat as well, you presume that, or you believe that there is a likelihood that that period of pain might be coming to a finish, so to say.
On this count.
On this count, yeah.
Microfinance, it's very, very difficult to tell what happens. It's a very volatile segment, but yeah, on this count, on this whole demonetization, its impact, its fallout,
also,
that seems to be dying down.
Won't a better monsoon also help in the months to come in some fashion? Just generally speaking, broader health of the rural economy, meaning that the reasonably stable performance or the improving performance will sustain over the next quarter.
Potentially, and I think a lot of people have now raised red flags about the kind of growth. Even the Microfinance Association has become a little bit more mindful. They put in some self checks and balances recently. So maybe those guys are a bit more cautious now on growth, which is a good thing, which is absolutely a good thing.
Okay, that's all we have for you on First Word today. Stay tuned to BloombergQuint, though we've got a lot more coming up over the course of the next hour or two. We're speaking markets with Sandeep Bhatia today of Macquarie.
Sandeep Bhatia of Macquarie will join in and talk about all that's happening currently, and we are perched at new highs. Where do we go from here? But we'll also talk in a bit more detail about how the Fed would look under Powell with McFarland of Union Bancaire. And is real estate set for a revival or not? We ask Shobhit Agarwal of JLL and Nirajan Hiranandani of Hiranandani Group. But for now, full tilt towards the day's trade. Agam Vakil is standing by with all that's happened in the F&O markets. Agam, good morning.
Good morning, Niraj. Marginal losses for the Nifty, and for the way SGX is panning out, we're likely to look at a very, very subdued opening, at least as far as the Nifty is concerned. But what's happened yesterday? Well, as you can see, we're looking at an increase of around 4.5%, while the Nifty hardly made any moves. So open interest increase has been there. On the other hand, when it comes to Nifty Bank futures, while the index really hasn't done too much there either, we have seen unwinding of as much as 2.5% as far as that goes. The India Volatility Index has come off to a certain extent, however, still holding on to the mark of 12. And that's going to be crucial for a lot of traders out there, because as long as it's above the mark of 12, we can expect some volatility as we move into the next few sessions. But the Nifty put call ratio largely remains unchanged, currently standing at 1.52 as against 1.5. Moving in, let's take a look at the changes in open interest in Nifty options. As you can see, there is more writing in the 10,200, 300 and 400 puts. So that's where you see some amount of support building in. On the other hand, more writing in the 10,600 calls, so resistance there. Keep an eye on those levels. Indiabulls real estate moves back into the band. But what else are we keeping an eye on? Hexaware Technologies. The stock moved up 13%, and it's seen a 45% gain in open interest, clearly towards longs. But Canara Bank looking at shorts, while the stock has declined by around 2.5%. We're looking at near 15% increase in open interest towards fresh shorts. So these are some of the other counters that we'll be watching out for as we move into today's job trade.
Well, thanks for that, Agam. Well, Indiabulls doesn't surprise me, really. It spent more time in the band than out of it. And this time around, no different. One day, right? One solitary day of it being out of the F&O band and then back into it. Right. So very interesting. Thanks a lot for that. Agam, Abhijit Pathak joins in to speak about that and more. Abhijit, I'm glad you cautioned viewers yesterday about Indiabulls real estate. Let's start off with that before we come to the markets at large, Abhijit. We'll get into the F&O ban again today. Any reactions, any way at all to trade it even in the cash markets today, or you would just refrain?
Yeah, good morning, Niraj. Indiabulls, real estate, the stock on the chart looking still good. I mean, it is in an uptrend, and I don't think there is any weakness on the chart at all. So even in cash, people, traders would use it to buy, and as long as it is about 225, 230 in cash, it has the potential to go to 260 or maybe even 300 over the next few weeks.
Okay. What about the markets, Abhijit? Either the Nifty or the Bank Nifty, is there a trade possible? What would you be recommending? What's your view, of course, in the first place?
Yeah, like I said yesterday, as long as 10,400 is intact, the uptrend is intact, and anyone who is long should use 10,400 as a stop loss, and any dips towards 10,400 should be used to go long. on Nifty, and with the stop loss maybe slightly below 10,400. So that gap up is still holding, which is quite crucial. I mean, even after 2 days, that gap is still intact. That means there is strength in the market.
Okay. Abhijit, what about specific stocks?
Yeah, actually, one trade which I already said was Indiabulls Real Estate. The second trade which I would still recommend is IRP, which is again, it's a bullish chart, and above 245 it can go to 255.
Okay. Abhijit, I just have one small question. I know you look at FNO very closely, but if you do look at charts as well, and if you've looked at the move in the recent past in companies like, the mid-cap IT companies, the 8K Miles, the Infibeams of the world, Vakrangi, for example, what's really happening here?
Yeah, they are in a firm uptrend, and I mean, they were always a buy on dips, and none of the charts had got damaged, and they are just responding to the strength in the market, and they should be used. I mean, all dips should be used to buy in them. Everything is still strong. There is no weakness on any chart, to my knowledge, yet.
Okay, we'll leave it at that. Abhijit, thanks much for joining in today and giving us that perspective. Moving on, let's take a look at how the commodity markets are faring as well, and Pradeep Pandya Johnson with that, and to take the show forward. Morning, Pradeep.
Good morning, Niraj. So let's look at the crude. First of all, the US crude is moving up. It's very close to $55 marks. And what is interesting is the gap between US crude and the Brent kind of narrowing a bit. This is interesting because WTI has moved up around 30% in 2000 from the year lows that we saw in June. And if you look at it, there is a lot of long trades that is actually happening in the market. Confidence has been boosted by the positive comments from Russia and other oil producing countries. But what is also interesting is that the EIA report suggests that US crude export has hit a record 2.1 million barrels per day. That is the latest data. So it would be interesting to watch, for how long could Brent really maintain the premium that it's actually quoting at. So while OPEC and Russia are trying to cut back, US is actually increasing exports. So that's an interesting trend to watch out for. Look at bullion. Well, there were important events like Bank of England policy meeting, and also you had the announcement of new Fed chair, but bullion didn't really move. That's interesting. There was some volatility during the day around $10–15. That's good enough actually, looking at the gold, but that was around the time the bill regarding tax cut was presented in the US Congress, and what the Republican bill actually proposes to do is cut down corporate taxes from 35% to 20% and also reduce the number of tax brackets for individuals. So that's bullion. Nothing much is happening there. Some more commodities. Sugar ended lower for second day. And there is also, some action in rubber, which is in early Asian trade. It's quoting higher for a third day. So that's positive. Steel is quoting higher for 4 days. Positive for steel as well. Aluminium is lower for second day. So negative signals for sugar and aluminium, positive for rubber and also steel. So that's the update really coming from the commodity markets. Let's look at how Asian equity markets are really doing. It's a mixed trade. So far, if you look at it, Shanghai is marginally down, but Hang Seng is marginally more or less flat. The movement is around 0.25 percentage points, whichever index actually you look at. Japan is closed, I think, today. So let's take the discussion forward with Avinash Gorakshakar, Head of Research at Jointry Capital Services, who joins us on the show now. Good morning, Avinash. What do you think? Second day of 4-digit buying by FII, that really enthuses bulls, doesn't it?
No, definitely, Pradeep. I think this is a pleasant surprise because on the local fund side, we have seen a little bit of selling. But FII's buying coming back after a long time actually means that the market is looking forward that possibly flows would again get back into the positive momentum mode. And I think, if these levels are sustained, I think you're going to see definitely renewed interest coming back in the markets. At these levels, if the FIIs are buying, I think that itself clearly shows that, they've turned buyers. So, I mean, let's wait and watch probably for another, say, a week or two, and then probably we could get a sense of how the trend is going to pan out.
Mm-hmm. So actually there has been around a 300 points move on Nifty if you look at it last week and this week. So that's probably the reason why in actually if you look at the mid-cap space and if you could show the yesterday's advanced decline, the market breadth chart, that will tell you a story that while index were holding firm, there was a lot of buying by FIIs in pharma counter in particular, and also several other sectors. PSUs were also firm. In the meantime, mid cap and small cap came under some kind of a pressure. What are traders really thinking of? I mean, looking at these numbers, traders would normally go out and buy. Why is there profit booking in mid and small cap?
No, I think clearly, the markets are looking at large cap companies primarily because the risk reward, my sense is looking much better on the large cap stocks. In fact, if you look at the kind of quarterly numbers put out by the large cap companies, especially if you look at power grid numbers yesterday, Pradeep, I think this is one stock which consolidated for a long time. I think the numbers which came out yesterday were quite impressive, both on the income as well as on the bottom line side. So I would say that yes, mid caps have run up a bit. You're seeing a little bit of profit booking, and selectively we are seeing some buying in good frontline, large cap names, and obviously that trend is not bad because selective profit booking on the mid caps and selective buying on the large cap definitely means that stock specific activity would continue.
Okay, fair call. Just before we get in Darshan with the earnings heat map, I don't know if you've spoken Bharat Forge or no, Avinash, but the Class 8 truck sales numbers yet again impressive. Now, what does this mean for investing into Bharat Forge as a company?
No, I think clearly Bharat Forge definitely gains significantly because the Class 8 truck market is a clear trigger for its axle sales, and Bharat Forge enjoys almost 25% global market share there. So I would believe that yes, I mean from a longer term perspective, I think FY18 and FY19 hopefully Class 8 truck numbers remain strong. You're going to see a lot of stronger growth. Another company, Neeraj, which could possibly benefit is Ramkrishna Forging. They are also a large vendor to Meritor, especially in the Class 8 segment. So that stock could also look up today.
Yeah, let's wait and watch. It'll be very, very interesting to see what happens to Bharat Forge in the session today. And a bunch of other stocks in news. I thought a set of numbers which impressed, and we'll get in Darshan to talk about them. Our research team will talk about some of the larger ones too. But the earnings heat map would be very, very interesting, and we'll talk about that too. But just before we move to that, Avinash, just one quick thought on some of these mid-cap, small-cap IT companies. The 8K Miles, Vakrangi Software, yesterday Infibeam, not strictly IT software, so to say, but I'm just clubbing technology and technological product companies into one, and the kind of run that these are having. What are your thoughts here? What would you advise somebody who's watching the show right now, wanting to know what's happening with an Infibeam or for that matter in 8K Miles?
No, I think clearly 8K Miles operates in a very niche segment, that is cloud computing. And unlike services, here the margins are extremely solid and visibility is also good. So I would believe that yes, there has been some selective buying here. Talking about Infibeam, I'm not aware what has been the corporate development, but Vakrangi is clearly a player on financial inclusion. And our sense is that the company is definitely growing strength from strength. I think you will probably see a lot of earnings growth over the next couple of quarters, because clearly government has put this financial inclusion as a major kind of a initiative for for the Indian population. But overall, I think 8K Miles, if somebody were to take a slightly medium to long term call, I think definitely it's worth taking a look, because within the product space there are very few players operating in this, and this is a niche player which obviously can give good risk reward over a slightly medium to long term horizon.
But some of the mid cap numbers that have come, look at the centuries, HEG revenue up 111%, net profit 114%, Himadri Speciality net profit up 170%. What are these numbers really? What do you read into it?
No, in fact, Himadri Chemicals has been a surprise, Pradeep. But if you look at HEG, I think these numbers actually follow what Graphite India had done. Numbers have been extremely strong. In fact, news reports suggest that now China has stopped making graphite electrodes. They are importing graphite electrodes due to some production shortages. I would believe that yes, the markets are definitely factoring in the fact that possibly FY18, the second half also will be very strong for these graphite players, and you could see probably a bump up on both HEG and graphite, at least in the near term.
So actually the chemical companies like Himadri or Shri Pushkar, and there is a slew of companies that have also benefited because of the same reasons. the supply.
Yeah, I think because of largely because of the China factor.
Yeah.
I think environmental concerns plus EBITDA margins inching up. More of capacity is getting routed to India. I think this play on outsourcing is definitely going to continue, and I would say that something like a Himadri or typically a Pushkar Chemicals or Bodal Chemicals, these are stocks which could possibly gain from this kind of shift happening from China to India.
Well, let's wait and watch. It will be an interesting one. Himadri, remember, also supplies to electric vehicles. I think that was a reason why it got noticed in a really big way. So interesting. Let's wait and watch what happens to that one. I was just looking at a clutch of other names. Berger Paints, of course, numbers came out, revenue numbers slightly better than what maybe the Bloomberg poll was suggesting as well. As we discussed, there was Himadri Chemicals, which came out with a robust set of numbers. HEG, of course, came out with a blockbuster set of numbers. The interesting bit will be whether or not the stock, which has gained almost 85% in the last 1 month, can it do more? 78% over the last 1 month. Let's just wait and watch if there is more in store for this one. Just before we get into our research team, though, one last question, Avinash, on Novelis and the numbers coming out and what it would mean for Hindalco.
No, I think numbers have definitely been quite strong. In fact, that gives the belief that on a consolidated basis, Hindalco numbers are likely to be quite solid. Both on the volume as well as on the pricing front. My sense is I think the markets are probably factoring in the fact that like Vedanta, there could be no extraordinaries either on the other income side or on the loss side. So obviously if these things don't pan out, you're going to see a strong set of numbers, and hopefully what the management commentary says on the volume growth, on the pricing environment, I think that would obviously be a key factor to determine how the stock actually turns out post the results.
Okay, so we have actually Vedanta number to talk about, also Novelis, and then what really to expect from Hindalco. Also power grids. So a number of results that came out yesterday and how markets would really react. What are analysts really talking about? Our research team is ready, Nikki, to begin with metal that we are discussing. What about Vedanta?
Okay, so Vedanta, first in that case, a good show coming in by the company. It's in line with estimates number. There is an input cost pressure which has weighed on the margins of the company, but that's pretty much on the expected line. Revenue is up by 36%, net profit at 46%, EBITDA at 21.3% growth. Margins have contracted to 26 from 29% earlier. The key takeaways primarily for Vedanta is higher commodity prices and low base for Hindustan Zinc has aided the top line growth of the company. However, we're seeing some cost pressure. Cost of production for aluminium business has gone up. Now, coal shortage, partial shutdown, along with carbon costs have weighed down on the margins of aluminium business. But then the company expects these cost pressures, and the con call it guided that it expects the aluminium cost of production to remain at an elevated level in Q3. It is expected to ease in Q4, but then that is on account of seasonally higher production by Coal India, and also the potential restart of partial Jharsuguda smelter power plant that is also expected to come to rescue for Vedanta earnings in Q4. So net Q3 we are expecting the cost pressures to remain.
And what do we expect from Hindalco?
All right, so Hindalco is expected to be in line with estimate, a good set of numbers that we're expecting. Novelis has come out with great set of earnings now. EBITDA guidance have almost been up. Margins have been at a 5-year high. The guidance has been revised. So that will have some positive bearing for Hindalco, obviously. In terms of the preview, what we expect, up 19% growth on the top line front. EBITDA, we're expecting a 14% growth out there. And the margins are expected, however, to remain flat at around 12-13%. PAT is expected to grow. Now, what do we expect? Now, higher LME prices is expected to aid the top line growth that's seen across the ferrous and the non-ferrous space now. But then the aluminium hedges that have been carried over from the previous quarter will have a weigh on the volumes. But then again, here also the input cost will come to pay, and we do expect the margins contracting on account of the input pressures that will come through. And in terms of the EBITDA performance, well, North America and Europe is expected to deliver good set of numbers, but then the South American business is expected to decline due to a lower forex benefit. So we will keep an eye out on the cost of production, South America EBITDA performance. That's two things that we'll keep an eye out for Hindalco.
Okay, Jayesh, how were the power grid numbers really in line or a bit better than expected?
Pradeep, in line, but operationally a little better. So when you look at the numbers, revenue grew 16% at about 7,253 crores, and the net profit surged 14.4% at 2,141 crores. In terms of the operational performance, EBITDA grew at up 15.5% at 6,475 crores, and the margins came in at 89.3% versus 89.6. So overall, in line numbers, operationally slightly better. When you look at the segmental performance, a tad bit of disappointment coming in from the consultancy segment. The revenue was down to nearly 25%, and transmission segment revenue grew nearly 16%. The positive surprise came in from telecom, where the revenue grew 21% at 174 crores. In terms of the operational profit for all of these segments, transmission was up 15.5% and consultancy was down nearly 36%. Once again, that's the disappointment coming in, and telecom surged 45%.
Okay, and Yatin, what are you watching for?
A couple of stocks in news, Pradeep, and we'll start with PNB, and they have disclosed to the stock exchanges yesterday night that they will be disposing entire stake in the PNB principal asset management company as well as the trustee company that they have. And also they have announced that they will be selling a partial stake in PNB Housing. So PNB, today of course there will be earnings, and PNB Housing, because the parent will be selling stake in the company. So both of these stocks will remain in focus. Also, we have Bharat Forge and RK Forgings in focus. We have the US Class 8 truck orders coming in overnight, and the data suggests that the Class 8 truck orders for October have risen, almost 161%, which is basically 1.5 times the previous year level, to a level of 35,700. And this is one number which has been the highest in the last few quarters. So clearly the Class 8 truck market significantly improving for players like RK Forging and Bharat Forge. Both of these stocks expected to react positively. Delta Corp, we have ACE investor Rakesh Jhunjhunwala's firm, Rare Enterprises, selling nearly 12.5 lakh shares in the last two trading sessions. Of course, the disclosure has been made on stock exchanges, and probably that stock should remain under pressure as investors probably look at selling the stock after Rakesh Jhunjhunwala's part exit. VST Tillers, their October tractor and tiller sales are up 14%. Max Life, they are keen to increase their stake in Lakshmi Vilas Bank, so that stock will be in focus on the back of the Economic Times report. And finally, we have SRF. They have been talking about acquisition in which they will be paying close to $1 million for a company called Mexichem UK Limited.
Well, thanks, Yatin, for all the updates. Thanks, Nikki and Jayesh. Avinash, Delta Corp, what's your thought?
No, I think, Pradeep, in the short term, I think HNI, selling out on this stock could possibly make the sentiment slightly negative. But if you see the overall business model and the way the company has delivered Q1 and Q2 financials, I would not be surprised that there could be some good value buying coming in at lower levels. Fundamentally, the company continues to do well, and despite the demonetization impact, the company has actually recovered well. And I would believe that, the third quarter, October to December, is normally a holiday quarter, a quarter where you can see a very strong growth in earnings. So I think one should look at it from a slightly medium-term horizon. A short-term downside could be used as an opportunity to actually accumulate the stock as long-term fundamentals continue to be good.
Okay. 8:45, that time of the show, we're going to get in our technical experts and derivative experts on board to talk about what could the day's trade look like. Gaurav Bisa, derivative analyst at LKP Securities, joins us right now on the show. And Meghna Malkan, author and trading coach at Malkan's View, joins us with her chart check as well. Both of you, good morning. Thanks much for joining in. Gaurav, any thoughts on what the key indices could do today, or are you sticking to specific stocks?
Good morning. For Nifty, it's already seen a good amount of up move coming in, and it has moved way beyond its breakout levels. I don't see too much of short positions getting built. There are people who talk of short positions at every level, but the fact of the matter is that every short, whether especially in the option side, the call option side, it is being forced to cover the positions. So the trend is quite strong, but I don't see a strong trade at this point in time in Nifty index. However, for Bank Nifty, it has just broken a crucial resistance level of 25,250. The ideal level would be to buy around 25,300, but even at the levels of 25,400, 25,375, that can be a lucrative level to go along. Have a stop loss of 100 points, and on the upside, it can move 500, 600 points from the the current levels, and the momentum is quite strong. We have seen private banks now participating. So the last rally in Bank Nifty was predominantly led by the likes of HDFC Bank. Now ICICI Bank is giving a strong momentum to Bank Nifty, and I think the momentum in Bank Nifty is to stay, and that is the only index that would give you lucrative trading opportunities.
Okay, so Gaurav's call out there, of course, is to buy the 25,700 call at the current market price. I presume the target is 110 and the stop loss is 60. Meghna, any intraday trades on any of the key indices?
Well, good morning. Well, as far as the stocks is concerned, as far as intraday, I would rather stick to those that are performing well, those are into well-established trend. Maruti and Bata are the two stocks that I think one could look at for intraday dips, because if it's typically see the action of Maruti, it has been sideways for 4 days in a row now. So I think that could lead to some momentum anytime soon. So Maruti is something that I'm tracking at, because once in momentum, that stock could give a big candle pattern on a daily basis. Bata is also one of them, because it has formed an indecisive candle pattern. A push above that is really going to give a good impetus to Bata as well. As far as the higher time frame is concerned, momentum is bullish on both of them, and volumes have been good on rises. So I think I'll stick to, I look for opportunities in these two stocks for today.
Okay, Gaurav, what are the stocks that you will be trading?
My first recommendation would be buy on Fortis. It had been in the news for all the wrong reasons, and we have seen consistent short positions getting built. There have been times when we have seen rollovers on the short roller also being on the higher end. This is the time. I mean, the current levels for last 4 days, if you look at the price pattern, if you look at the open interest pattern, we are not seeing too much of addition happening, and it's been consolidating between 140 to 144 at the current price only. And this is a very long-term support as well. So one can preempt a short covering here, and it can easily lead to levels of 150 to 155. And with a small stop loss of 140, one can buy Fortis. The immediate targets would be 152. And if it sustains those levels, I would not be surprised if this becomes one of the most lucrative trading stocks for the November series. Second, we buy on Ajanta Pharma. So if you remember, in our previous conversation, we were discussing about Glenmark Pharma, how the pattern and how the kind of data it has seen, it can see a good amount of upmove. We have seen some part of that upmove already in Glenmark Pharma. The next leg of trading in pharma can be from Ajanta Pharma. In last 4 trading sessions, we have seen somewhere around 7 to 8% OI additions happening. It has only moved a couple of percentage points. It's at the cusp of a good breakout on daily charts as well. So a combination, a good combination, a good cocktail of technical and derivatives data. I think it's a wonderful stock. It can move 100 rupees from the current price, but for trading per se, for next 2 or 3 trading sessions, one can have a stop loss of 1225, play for targets of 1300 and above.
Okay. Meghna, I would urge you to look up the charts of Reliance Capital, because I think that's what the Bloomberg terminal is indicating something about in our special segment, Bloomberg Edge. Jayesh Kirlani is getting us what the pattern is and what is it that the terminal is talking about Reliance Capital. And then we'll, of course, ask Meghna about her view. But Jayesh, what is the pattern that you have for us?
Morning, Niraj. The bearish engulfing pattern is what we are looking at for Reliance Capital. As of yesterday's close, the candle that has been formed, that is a bearish, bullish engulfing for Reliance Capital. Now, let's have a look at how the entire pattern plays out. So the first candle has to be a bearish candle followed by a bullish candle. So essentially a red candle followed by a green candle. And the candle with the green candle, which is the body of that, should be bigger than the first one. Those are the criteria that you have to watch out for. And once all of these criteria are met, there is no additional confirmation which is required. Now, going to the chart of Reliance Capital that we have, you can see as of yesterday's close, the last 2 candles I'm referring to, you can see that this green candle, the shaded portion, that is actually bigger than the one just before that, which is the red candle, which is called as the bullish engulfing pattern. So that is what the terminal is indicating. And once we have this, usually there's a buy signal which gets generated on the stock.
Okay. So that's interesting. This pattern would be interesting, especially because on Monday we also have a listing from the ADAG group coming in. And last time around, there was a listing after the demerger of Reliance Home. Actually, Reliance Capital started correcting, and it corrected for a while. Now, let's say if this listing would kind of alter that trend in Reliance Capital stock. Thanks, Jayesh, for the details. Meghna, would you have a technical view?
Yes, if you see if you analyze it first on the high time frame chart, the weekly charts, yes, after the downfall, if you see, we've had a few weeks of sideways consolidation. Now, this was characterized typically by indecisive candle patterns with good amount of volumes. So, definitely once the stock moves above the 585 levels, we could expect some kind of action in this stock. Not to mention, of course, with the action that you're saying, coming up early next week. So, I think that could be a trigger. As far as the pattern that we're speaking on the daily chart, yes, the formation is that of a bullish engulfing, but the whole range has been sideways. We need to see in what light it comes from. It's sideways. The pattern could have effect once it moves above the high. So essentially, we should be looking at about crossing the highs of the last 3 weeks. That is on 585. That's where the action could be in this stock for the next week, I believe.
So very interesting. That's a combination of thoughts out there. The terminal giving an early sign, making up at least 585, Pradeep, that once it crosses that. Yeah. And an event, yeah. So could be interesting. But if the event's history is anything to go by,
let's see.
Let's wait and watch. Okay, but we've been talking about numbers, 2 or 3 of them really. I mean, Novelis results, Vedanta, and then a clutch of others. But hey, 2 days in a row now, we are having more green on the screen than red. And Darshan is here a bit later on because there's just so many numbers to talk about. Darshan, lot of green on the screen.
Yeah, it is. And over the past few days, it's seen that the mid caps are doing much better than the large caps. So you can see the green. So most of them are mid caps. Among the 2 large caps, Vedanta and Power Grid came out with an inline set of numbers. And that's been the general trend when we discuss the Nifty heat map. These are the smaller companies that came out with number. Axo is a bigger company, but Berger came out with an inline set of numbers on the same industry. Axo came out with a weak set of numbers. Individually, let's discuss some of them. Glenmark was one of the stronger numbers that came out after market hours. Revenues up almost 2%. Profit was down almost 7%. But our estimate was 190 crores. It's come in at 207 crores. EBITDA margins coming in much higher at almost 17%. So they've come in at 17% versus the estimate of 14%. So Glenmark is a strong number this time around. A lot of cost controls were taken in Glenmark, and there was a forex gain also. But operationally, a decent set of numbers by Glenmark. Ujjivan, if you're looking at it, net interest income was down almost 12%. But over a quarter-on-quarter, if you're looking at it, net loss, it has come into a profit of a net loss of 12 crores versus a net loss of 75 crores. Asset quality has improved significantly. The GNPA at 4.99% versus 6.16, and net profit is down. Net NPA is down to 1.38 from 2.30. So the asset quality has improved drastically for Ujjivan. GTND, strong set of numbers. Revenues up 4%. Net profit up almost 132%. Margins coming in at 9.3% versus 4.2%, and there is clear operational efficiency that is being built into the counter. HEG, there's nothing more to say. It's been on a one-way street. So because of rising prices, revenues up 90% from a loss of 14 crores, a profit of 114 crores, and EBITDA margins of 46% versus 18%. Clear turnaround. That was the case that we saw with graphite also. Himadri Special Chemicals also very strong numbers, 32%. Revenues up, profits up almost 168%. So you're clearly seeing the trend coming out in these specialty chemicals play, be it or the commodities plays like HEG or Himadri Specialty. On the weaker end, HCC came out with a weak set of numbers. Profits were up, revenues were up 6%, but profits were down almost 60%. Margins coming in at 15% versus 21%. And Dalmia Bharat Sugar, weak set of numbers. Even though revenues were up 22%, operationally weak. Profit was down 26%. Margins coming in at 12.5% versus almost 20%.
Thanks, Darshan, for all the update. And looking at some of the numbers, Ujjivan Financial is interesting. GTND could be another interesting number, and Jai Bharat Maruti. Well, let's talk about GTND first, Avinash. If you have tracked this stock, I think last quarter also saw some kind of turnaround, and this is probably a confirmation, right?
Yeah, I think the last quarter was also good, Pradeep, and clearly the second quarter reassures the fact that not only the order book, but in terms of margins and top line growth, numbers have been much better than what the street expected. In fact, clearly this shows that the sustainability of margins is now coming out. So obviously the second half of FY18 also looks a lot better. Another stock which you mentioned, Ujjivan Finance, I think that is one stock which I would believe after a long time the markets would get a sigh of relief that the losses have come down, the asset quality has improved, and I think the microfinance space probably would be buzzing today. I think this is a large player, had been hammered because post demonetization there was an impact on their business. But I would believe that yes, if these numbers are sustained over the next say December and March quarter, I think you could see a lot of re-rating happening here. And this being a large player, I think one could definitely look at it from a longer term perspective.
Very interesting. Yeah, let's see. IDA did some analysis this morning about how the operational metrics and the asset quality numbers looked a lot better for all the three microfinance players. Let's wait and watch if indeed there is some traction. Avinash certainly believes there would be. One quick chart check, Meghna, if you can, on two names which had a big day yesterday, whether that can continue today. One of them is Hexaware, the other one is Idea Cellular. Meghna, can you hear me?
Yes, Niraj. Hexaware did have a huge move yesterday. If you see the white candle pattern that formed was extraordinary. The range was high, and it was accompanied with high volumes as well. Well, the way I read this chart is weekly. If you see, Hexaware has been actually broken off a good formation. If you see the stock after the short decline, it was consolidating for quite some time. It had this steady rise after the consolidation. Now it's broken out of this. The breakout did cause, of course, for a good buy there because it was supported with a good volume as well, good momentum. I think this goes into one's buy list. We should look for opportunities once it comes to the change in polarity level, means once it comes nearer the breakout zone. I think this calls for a good buying opportunity here. So this could be on the track list for buy, I believe.
Okay. Track list for buy. Also keep on the track list for a buy stock. Carborundum Universal. Pradeep had some interesting chart data yesterday. Let's wait and watch what happens over the course of the near term. Gaurav, a 20-second answer. We are very close to pre-open. But any telecom stock that you would trade? Bharti, Idea, I'm classifying Reliance as 1-2. Very quickly.
Idea would be good. It has seen 15-16% OI gain. It's come out of the range. So any dip towards 104 can be lucrative opportunity and go along with the stop loss of 100. On the upside, 115, 118 can be seen.
That's quick, all right. A stop, thanks Gaurav for that. A stop loss of 100, a target of 115, 118 can be seen on Idea. But 12 seconds to go. This is the setup and how it is looking like. The Asian market's a mixed bag. The handover too was pretty mixed, I must add. And we're starting off on a slight, marginal bit of green. Actually, it's come off a bit. The SGX Nifty was much higher when we started off the show. Now just come off a little bit. But these are the pre-open rates. 10, it just indicates a flattish start, the Nifty does. The Sensex probably a more believable, a third of a percent, maybe not that much, but we'll probably have a start which is marginally in the green. Let's bring up individual names. Firstly, Vedanta, and I'll couple Hindalco along with that. The two large boys from the metal space. Vedanta numbers slightly muted, which is why I think these pre-open rates need to get a life, frankly. But no, Hindalco, let's pull that one up. Maybe that's a more realistic reaction after the Novelis numbers that came out and the guidance uptick. Yeah, you probably presume that there could be some bit of a start in the green for Hindalco. Bharat Forge would be another interesting large cap that I would look out for. Let's bring that one up. The Class 8 truck sales, robust. You probably have a start in the green. This is probably a bit more believable, a couple of percentage points or maybe higher than that. So let's wait and watch. And then a clutch of mid caps and small caps. Yes, Delta Corp is a high volatile, high liquidity counter, and the big investor selling off or paring some of his stake. Remember, the very large stake, he's on the board, so don't just look at this as a signal that he's gotten out of the company. But having said that, such a reaction or such an action would evoke reaction. Let's see if there's some further reaction on Delta Corp today. And then the result reactions, Pradeep, I'm sure. HEG is just one that I want to point out. I'm sure Pradeep has a lot of other stocks, but HEG, it's been such a strong stock, but the numbers so good. 1840. Can you imagine how happy the clients of Jefferies would be? They alerted clients to buy in an open note when I think HEG was sub 1,000 in a matter of a month and a half. It's been a stellar run for HEG and Graphite India. Yeah,
but look at the EBITDA, which is up from 190 crore to 900 crore. So, yeah. I mean, if this is the way margins have improved from 9.5% to 46%, when there is this kind of a jump in operational metrics, anything is possible. Himadri's specialty was other stock we talked about, where profit has more than doubled actually. That one is up only 1.13. Deepak Fertilizer is another stock where we have seen significant increase in profit. Let's see what happened there. And also Ujjivan then, and also GETND, this stock we talked about. Ujjivan is up close to 10%, and GETND is the other stock that we should really keep an eye on. This one is up 12.5%. That's really significant. Other than Bharat Forge, I think RK Forge is the other stock that would benefit from the US sales numbers. So let's see how that one is reacting. Dr. Reddy's and Lupin would also be in news because of the launches that have been announced. So Dr. Reddy's is up just 1%. Lupin has hardly moved. JB Chemical and Fertilizer, by the way, we see Ashish Dhawan selling 4.5 lakh shares once again. So I think it's quite routine now, but no reaction as far as this counter is concerned.
Okay, just a quick word, if Pradeep hasn't mentioned really on the currency as well, 64.55 versus 64.61, so nothing really, just about
continues to gain.
Yeah, continues to gain. Okay, Sumit Sarkar is waiting by with the big brokerage calls for the morning. Sumit, good morning.
Good morning. Today on brokerages, we have Credit Suisse on non-banking financial companies. They have initiated coverage on PNB Housing Finance with an outperform rating and a target price of 1,780, which suggests a potential upside of 24%. Now, PNB Housing Finance is one of the fastest growing NBFC and they should be able to sustain this growth going forward via geographical expansion and unique hub and spoke model. Now, they're expecting company to gain benefits of scale from operating, and because on the back of that, they're expecting operating leverage to kick in, which would expand the company's return on equity to 18% by financial year 2020 from current 13.6% level. Now, they're expecting the loan book, revenue and net profit to grow at a compounded annual growth rate of 40%, 50% and 51% over FY 17 to 20. Second, we have is Credit Suisse initiating coverage on L&T Finance Holding. Now, they have initiated a neutral rating with a target price of 210, which suggests a potential upside of just 6%. Now, the new management has identified new focus areas and have trimmed the defocused business, but the loan book still remains wholesale heavy, which is unlikely to change going forward, with focus on select infra segment, builder loans and smaller scale of identified retail segments. Now, Credit Suisse also expects the cost of credit to remain high going forward, and currently L&T Finance is trading at multiples which are equal to the retail private lenders, and they're expecting a negligible upside from here. Going forward, higher than expected loan losses and slower growth in retail could be negative for the stock, while stronger than expected loan growth and lower credit cost would be positive. Third, we have is Credit Suisse on LIC Housing Finance. Now, they have downgraded the stock to neutral from outperform and have cut the target price to 600 from 800. Now, in the last 2-3 years, LIC was benefiting from favorable rates where PSU banks kept lending rates sticky even as funding costs were falling. Now, this may change after the PSU bank recap and competition would increase. Now, on the back of this, LIC may face margin pressures going forward, and CS is building a flat margin for LIC, and as earnings are more highly sensitive to margins, they have cut the EPS estimates by 14 to 26% over FY 18 to FY 20.
Okay. Thanks, Amit, for all the details. Several NBFCs in news and also on brokerage's radar, actually. Gaurav, any of the NBFC stocks that you like from trading perspective?
IndianOpen Housing is one among that particular space that looks quite interesting. We have seen in last 4 trading sessions there has been an addition of 15-20% OI change, but I would also like to mention it's trading near the support levels. We can see another % dip in the name, but around 1210, 1205 is a strong support. One can buy here on about 1220 and play for 7-8% up move coming. It can be seen in next 4 to 5 trading sessions.
Okay, Indiabulls Housing Finance. By the way, I'm interested in seeing what happens to Indiabulls Real Estate today, back in the F&O ban. So should be interesting to see what happens to that stock. Power Grid is starting off on a good note, seemingly starting off on a good note. So let's wait and watch what happens to that one. The pre-open rate's yet to settle, and Hindalco and Vedanta seem to be the stocks which could also do much better in the session today. We'll wait and watch for that. By the way, Hathway Cable is up 20%, Pradeep, in the pre-open rates. Den Networks is up about 6% as well. There's something clearly happening there.
Yeah, interesting to see. Actually, although the numbers were a bit difficult to kind of analyze because of the demerger, but reaction is definitely positive.
Yeah. Okay, but speaking of positive reactions, Torrent Pharma is up 5%, Unichem Labs is up 3.5%. Newspaper reports suggest that Torrent Pharma is all set to buy the domestic business of Unichem Labs. Darshan is joining us with what would this mean for both of these companies. Darshan?
So newspaper reports over the past few days have been coming. What is triggered is that both Torrent and Unichem have their board meetings for their results today. Now the valuation that has come out in across newspapers is anywhere between 3,200 crores to 3,500 crores. Now remember, the market cap of Unichem Labs is 2,900 crores, and what they are buying is 60% of the business. So they are paying much more than the market cap for just 60% of the business. So the valuation is quite decent. So if you're looking at the valuation of 3,200 to 3,500, it comes in at a valuation of anywhere between 10.7 to 11.3 times EV to EBITDA as per on an FY19 basis as per analyst, and the current, and if you're looking at the FY19 EV to EBITDA for Torrent Pharma, it is almost 14 times. So it's getting an asset at a much better rate than its current valuation. Unichem is basically focused on chronic segment. 60% of its revenues comes in from the domestic market. So almost 800 crores or 850 crores of its revenues comes in from the domestic market. What are the benefits? First of all, the revenue overlap between Torrent and Unichem is very low at 28%. Majority of the overlap happens is in the CNS segment. Now, because of this combination, what Torrent will get in, Torrent will move into the top 10 Indian pharma companies from the current, I think 12th or 13th it will move to rank number 8. The field force productivity will likely improve post acquisition. We've seen Torrent do that with the Elder acquisition. Cross selling will actually benefit both the with them. And now there was this drug that Unichem had called Lostarin, in which was under the NLEM price control. Now over the past 2 years it's come out of it, and that is something, the price increase can help Torrent Pharma. And basically the Torrent Pharma's balance sheet is very healthy. They can easily do this acquisition. Credit Suisse has come out with a report, and they are saying that it is complementary, the entire acquisition, if it happens, and Torrent buying India portfolio of Unichem is 5% value accretive for them.
Wow, let's wait and watch. Both the stocks active in the session today, good ones to look at. Just before we get you all you need to know though, I think I just spotted one stock. Unless I'm very wrong, Excel Crop Care is doing extremely well in the pre-open session. Should pull up that stock for you. I think the numbers came out. Look at that move. Volumes are thin, yes. We'll get to know more about it once the markets open. But 20% in the pre-open rates. Avinash, any thoughts here? Excel Crop Care?
I think, Niraj, yesterday numbers came after the markets, very strong numbers. In fact, the revenue is up by almost 48%, and the bottom line is up by almost 68% to 45 crores. So I think a very strong beat on both the operational EBITDA front as well as on the bottom line front. I would believe that, yes, agro companies have been in the focus because of the rural theme, and probably, this is a mid-cap stock, not much liquidity in the counter. But yes, in terms of the operational performance, this stock could possibly get further re-rated.
Wow. Okay. Avinash, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. Well, Avinash Gorakhsekhar, he's spoken about 2 or 3 stocks which people could look out for. One of them is Excel Crop Care, of course. He believes Bharat Forge could also have a fairly decent outing. And a couple of numbers like HEG, Graphite India could be the interesting ones as well. But minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. Strong numbers included Glenmark, Ujjivan, Hathway Cable, Deepak Fertilizers, GTND, Transport Corporation of India, and HEG, and almost all of them are reacting well in the session today.
Well, on the other hand, a weak quarter for HCC, Dalmia Bharat Sugar and ExxonMobil. Vedanta and Power Grid almost met the expectation.
Hindalco subsidiary Novelis reports better than expected results with strong EBITDA, also raises FY18 guidance. The stock likely to start off on a positive note.
Well, Hindalco numbers will come today, and also BSE, Edelweiss Financial, PNB, Titan and Torrent Pharma are some of the numbers to watch out for.
Unichem and Torrent Pharma in focus on back of a possible M&A deal. Both companies report numbers today.
And Delta Corp in focus as Rare Enterprises sells 12.5 lakh shares of Delta Corp in the open market. So let's see how it really reacts. Okay, in pre-open session, stock is down 3%.
Okay, on to the big voice for the day. Before we get in some final thoughts from Meghna as well as Gaurav, just a quick thought or opening thought from Sandeep Bhatia. He joins us in our studios, needs no introduction, Managing Director and Head of India for Equities at Macquarie. Sandeep, great having you. Thanks so much for joining us on BloombergQuint. The big headline as I see it, that you believe that earnings forget FY18, even FY19 are in a bit of a threat compared to what the consensus is believing.
Yeah, I think Indian consensus starts at a higher level and then we see more realistic consensus emerge. So we would see some kind of earnings growth corrections. We are looking at a 15% earnings growth for FY19, and then we will take it up from there. I think the key thing to look at is the fact that India will have a stronger and improving earnings growth cycle than we have had for the last 3 years. Also, there's an overlay of huge inflows coming through. Globally, we are in a fairly benign liquidity scenario. In India, post-demonetization, there is, in fact, huge financialization of savings which is happening, which is the biggest achievement of this entire demon process, I would say. So to that extent, as far as the markets are concerned, the inflows will help stock prices.
Okay, but we actually thought that government is now finally thinking of growth and also the adverse impact of demonetization and GST that came on GDP growth are also behind us, and things should actually improve here on. And you don't really agree? I
think the bank recapitalization is the move, which will help the GDP growth to come through, and hopefully we'll also see some of the old cycle, old industry cyclical stocks come back, and that will take 12 to 18 months. So if the bank recap happens, let's say by April to June of the next year, we will see 12 to 18 months from there the improvement come through. We also have a very strong view that the infrastructure cycle will first be driven primarily by government spending. It's in roads and railways, and only then, probably in 1920, later half of 19, that we see the private sector come through slowly. There is currently no big capex plan for the private sector, and we need strong growth for at least 18 to 24 months in GDP before private sector starts spending.
Okay, Sandeep, hold on to that thought. Lots more to talk about. We'll probe that in great detail. But a minute left for the markets to open. Quickly get in the top trading ideas from our experts. Gaurav, to you first. Your top trading call for the morning.
Indian Bank is looking good. We have seen a good amount of OI additions happening. Yesterday there was addition of 4 to 5% change in OI. It can test levels of 345, stop loss of 332, 331. I think this can be a day of PSU. So apart from Indian Bank, even PNB looks good.
Okay, Indian Bank, the top call. PNB can also be traded, but Indian Bank is Gaurav Biswa's top call. Meghna, 20 seconds, please. Your top trading call for the day today.
Niraj, I like JM Financial. The stock is really good. First of all, the pattern, the higher time frame chart is good. Daily has a very good support at 20 period moving average. I think this calls for a very low risk reward trade at with a stop of 165 for a target at 190.
Okay, Gaurav as well as Meghna, thanks so much for joining in today. Those are the two trading calls for the morning, but here's what the market is doing at open. A start, well, about 1/4% in the green. The Nifty Bank too, about 1/3%. So that one is starting off on a good note. We'll pull up the Nifty heat map and show you what's leading to this move. But clearly the start is much better than what the SGX Nifty was indicating, at least on the index. On the Nifty, it seems to be much better. More green than red on the screen, which is actually good news. No big movers. I mean, 2%, 2.5% seems to be the order of the gains or the losses. But yeah, no big losers as well. That's, I think, actually the key thing. And IT seems to be starting off on a slightly tepid note. I just want to bring up 1 or 2 stocks out here before we get you individual movers. One of them, of course, is Hindalco. And I think it's starting off on a good note because Novelis numbers were good. And they have raised the guidance for Novelis more importantly. And that stock is up about a couple of percentage points. So good going. Actually, let's get in Vedanta as well. The numbers slightly soft, compressed volumes, margins came off a bit. But as we said in the morning, the metal stocks and maybe the oil and gas pack is charting a very different course. Earnings disappointments are not really hurting these. And this one too, about 1% higher in trade. I'm sure Pradeep has a bunch of other stocks, but I just want to mark 2 or 3 names that I thought we should bring in for our viewers standing out. Bharat Forge, very strong class action truck sales from North America, and 3.5% up for this one. So very good, but yeah, the numbers were very good. So no surprise out here. Is there a possible deal with Torrent? Newspaper report seems to suggest that Torrent could well be on its way to buy the Indian business of Unichem, and that stock is up about 4.5% in the session today. So good going for Torrent, Unichem. I think Torrent too is doing reasonably okay. Very strong results for these 2 names, HEG as well as Himadri Specialty Chemicals. Both of them up 5%. I think HEG numbers, especially the EBITDA numbers, were very, very buoyant. Almost 400% jump, actually more than that. So HEG is strong. And Himadri Chemicals too, I think they've done extremely well. EBITDA up 83%, not in line with what HEG has done, but that's okay. 83% jump in EBITDA is no mean feat. feet. And this stock too is doing okay. So a clutch of names, Delta Corps and a few others which are doing well, which would be in news as well, but I'm sure Pradeep has his handle on them. Pradeep, what are you spotting?
Krishna Forging has also moved up along with Bharat Forge, but the key gainer here in this segment actually is MTech Auto, which is up around 14%, and Metallis Forging, the other group company, which has gained 10-11% in today's trade. Other key moving sector would be, after the Hathway Cable numbers, which is up 20% in any case, the other two stocks have also moved up. City Cable is one, and also Den to watch out for. Both these stocks have moved up with good volumes. To talk about some other stocks, TND is up 11% after impressive numbers. Ujjivan Finance is up 5%. Again, the result impact here. And also you have Hindustan Copper. This is one PSU stock which was actually strong ahead of the Dredging Corp news that came in, and it continues to move up. Lakshmi Vilas Bank is another key gainer in today's trade. GHCL has of course moved up, and also you have some more names like KEC, Dish TV, Wellspun, Gem Financials gaining in today's trade.
Just one couple of things. One of XL Cropcare, I just want to see if that one is moved or no. And there is a block deal, I presume. Darshan is just trying to tell me about a block deal that has happened. I think a large percentage of equities changed hands. We'll just get those flashes up on the screen and then talk about that stock. I missed the stock. There's a large block deal that has happened on the counters. Is it Bharti Airtel or Bharti Infratel? I think one of the two. Okay, there's a block deal. 4.6% equities changed hands in Bharti Airtel. Now that is very, very interesting. I think promoters were on record saying that they want to increase their stake in Bharti Airtel. Unless I'm very wrong, this was the quantum that was being spoken about. I dare say this could well be promoters buying further in Bharti Airtel. Let's wait and watch. We don't want to speculate too much. But if I remember the news flow about 4 or 5 days or 7 sessions ago, this is what the news flow was, that there could be promoters maybe wanting to increase their stake in Bharti Airtel. Sub 60% I think was the stake. They would probably take it to above 70% or thereabouts, unless I'm very wrong. Maybe this is it. Sandeep, if I can just take a leaf out of all the news flows in the morning and start off with telecom as well. In all probability, this will be the promoters increasing stake in Airtel. Quite a turnaround for telecom in a matter of 1 month, ever since Jio just raised the pricing a little bit.
I think that's what the market was waiting for. I think market has been concerned about price competition from Jio, but what has happened is that the weaker players have exited this, and the pace of that exit honestly has surprised everybody. We didn't expect that it will restructure as fast, and the markets have clearly moved in anticipation of this happening. And I would think a player like Bharti and the Idea Vodafone combined would be the three incumbents with Reliance Jio, which will survive, and therefore everyone's betting on Bharti. So we are probably back to the good old days of telecom leading the markets, and this I think is symbolic of the fact that the market in 12 months time will be looking at sectors other than the traditional banks, financials, and the consumers. So I genuinely think that we could see stronger CV sales come through, and that itself will help CV stocks. So Tata Motors will be a big beneficiary of that. Telecom is already playing that. The one thing which now needs to fall in place is the IT sector. And I think if the IT sector also sees the strong growth globally, which we are now seeing coming through, then a much wider variety of sectors will come through. So therefore, the immense pressure on valuations in terms of key stocks getting very expensive, hopefully that gets corrected.
Okay, I think a big call, and we'll talk about that, is you are moving IT from underweight to overweight. But I just want to scratch the telecom bit for a point for a bit, Sandeep. Is there merit in owning a telecom stock afresh? Because an Idea and a Bharti on a valuation front are no longer the Idea and the Bharti that were there pre-Diwali, or actually, well, not pre-Diwali really, but in the month of September. There's been a substantial move in these names, and although the promoter is adding stake, which shows a further skin in the game, for an investor, does it make sense to own these stocks afresh?
After China, India will be the largest consumer of data globally.
Right.
Our entire digital ecosystem is still evolving. We are still long away from that. I think the falling price of devices and the upgradation of the networks, which we are seeing, is going to take this entire sector in a different dimension. So I think if you have a slightly more than a 6-month, 12-month horizon as an investor, I think a 3-year, 5-year horizon, telecom will be something which will be critical to the new India going forward. So I would think, yes, an investor can definitely look at getting into the telecom sector are fresh.
Well, one key sector, which is the PSU banking, which is also kind of moving up along with telecom these days. You don't seem to be positive on that one.
Well, we have had a view that the PSU banking needs recapitalization. And we also have had a view that it needs a change in management processes and structures. The recapitalization has happened. I would think it was a year to 18 months later than it should have been, but then, okay, it is here and now. The operating mechanics of the entire PSU sector, except the top bank like State Bank of India, is clearly needs to be upgraded. Their own HR processes and the incentives to take the correct decisions have to be in place in the organizations.
Can it really happen without privatizing? And do you think that can ever happen?
I think mistakes happen everywhere. The global financial crisis was done by big, large private sector banks. So I'm not of the view that just the ownership change. It is the cultural change. The culture has to happen from the governance level of the country also. I think we are in that process of that changing too, but it will take much longer for public sector banks than for the established private sector players. So I would go with an ICICI bank. I would go with the existing private sector banks or the PSBs. They've already run up. Maybe there's still more room to go, but we are more comfortable betting for the established players in the private sector.
Okay, so a sector upgrade maybe, but not necessarily all players would perform.
Yes.
Selected few. Let's talk about your big call. To me, the big call really, moving IT from underweight to overweight. Now, is this a blanket across the sector call? Do you believe the rising tide will take up all the boats? Of course, you have to pick and choose, but do you think all the boats will move up? Or are you very, very selective within large caps and within mid caps?
We have to be selective in IT. It is not the gung-ho days of the pre-2000 TMT side, where the sector just came into being, so to say. This is a more mature sector. This is a sector in which some managements have had issues, internal issues. So I would go with HCL Tech, and I would go with TCS and Infosys in that pecking order. But definitely, I think the time has come to look at IT because valuations are at a compelling point. The same thing which happened with telecom, that people had given up on it, and it was a large sector but completely fallen out of favor. I think IT is in that zone. It may take 3 to 6 months for it to come back. It may take even longer. We don't know. But valuations are something that we should react to, and that's why we are upgraded.
But if we look at this quarter, and sure enough, the commentary from certain large players also was not too disappointing for FY19, if not FY18. But that space that put up its hand was mid-cap IT. You can't really fault the mid-cap IT space for delivery this quarter. You would still, I know for your institutional clients, liquidity and the market cap would matter. But as a theme, as a performance delivery, do you think mid-cap IT has done its bit this quarter?
Of course, it's done its bit, and I would think that these names will continue to perform. It's the question of risk reward and liquidity. So I would still go with the large cap ITs, but mid cap ITs have also done it. But and probably in some ways they will come in faster than the large caps.
Okay, just a couple of stocks that I want to mark. Bharti Airtel is about 3.5%. Let's just show those stocks on the screen. Bharti Airtel is now up 3.5% in trade, so 562 in the session today, and Axis Bank is up about a couple of percentage points, so that is not doing too badly.
Okay. Well, the other sector really to talk about is pharmaceuticals. Do you really see value there as well? Because now some good news has started trickling in. DV's got a success. Maybe Sun Pharma is next to follow.
I hope that happens, and then it basically comes. The other sectors come into play. We are still cautious on this because the issues with the pharma sector are regulatory in nature. It's impossible to time when the regulatory environment will turn more positive. We have had a series of bad news. People can react to valuations, but it's not just the business economics. It's just also regulation and US FDA approvals and so on and so forth. So on that sector, we are going to take it more slowly.
Okay, and what about commodities? Because this is a segment which is doing well. You have lots of names to choose from in the mid cap, but even large caps have done well. Looks like the commodity cycle has turned, whether it is crude or metal. Do you see?
The commodity cycle has turned big time.
Correct.
And it's turned across the board. Even the oil, which is seen to be a sector which will not see such a strong increase, has also seen at least $10-12 increases. I think the commodity sector probably has legs for another 6 to 9 months. But we are in the mature part of the cycle. So I don't think that this will go on for another 2 years. I would, at higher levels, one would think of actually moving to out of favor sectors like IT, taking money out of metals and getting into IT. So that would be a better plan of action.
Oh, interesting. Okay. The other theme that a lot of people, Sandeep, are talking about, at least on the money manager side, is aviation. As a pack, is it something that you would feel comfortable recommending it to your large clients?
We don't have a research view on that sector, so I'll go outside the research view ambit. I think we would see strong growth coming through in aviation in terms of passenger increases month on month for the last 12 months plus. We have seen that. As long as crude oil prices remain in the $60–65 range, this sector should do well. There are capacity constraints in some large airports such as Mumbai, and that's also creating its own pressure points. But it's a quasi-consumption driven story.
Sure.
More people are flying, and as far as if the cost line remains under control, this is an interesting sector.
Let me ask you something that Macquarie as a house is really known for in its coverage on commodities. Now, that basket has had a dream run of sorts. If you look at the last 5 years, not really a really long history, but they're the best 1.5 years that I've seen for the last 5–7 years or thereabouts. What happens to these names? If the results are to be believed, the commentaries to be believed, Hindalco has raised the guidance for Novelis as well. There's probably some more meat, but are the stocks pricing that in, or do you reckon there's similar?
I think earnings upgrades are coming through even for the names that we cover continuously, and I think we have another 12 months, as I said, for this cycle to continue. Whether you continue to now go overweight from this point onwards, or hold your weight and then cut into the second half of next year, is a call. So I'm more inclined to holding weights and then cutting gradually and moving away from commodities. Wow. Unless you say that we are in a super cycle that we were in 2003 to 2007 for global growth, where there's synchronized global growth, only then will this entire commodity sector take another leg up in 18 to 24 months. We have strength now, and we continue to see strength for the next 12 to 15, 12 months or so. But after that, I think the stock prices generally react ahead of the cycle changing. So probably in the next 9 to 12 months, we should reevaluate.
So actually, the growth data is kind of improving world over. So where exactly do you see a problem? Why do you really believe that commodity demand?
No, we don't see a problem. So it's just been understand that cycles are there, and cycles you cannot pinpoint when the cycle will plateau. So it is partly just historical background that when things are improving, we ride that improvement. At some point in time, you decide to take money off. There's no problem that one can actually pinpoint to in the growth cycle right now. Mm-hmm. But this is where we are, right? Everything is looking good. But 6 months ago, I don't think anyone would have said that.
Okay. The other key step that government has really taken off late is boosting infrastructure spending. Is there a way to trade it, which stocks in your universe will really get affected?
I think L&T is the one stock that we think will play this both at the balance sheet end and at the top line end. So we expect strong top line growth coming through. I would say that this is one stock that can double in 3 years' time, both due to a combination of re-rating and earnings growth, and the balance sheet where the cash flows, working capital cycle is coming through, so cash generation is increasing. So L&T is definitely one big play. There are other plays, but there are much lesser quality names as such. So L&T is the one stock that one can definitely look at.
Before we wrap this discussion, Sandeep, one dark horse for the next 12, 18 months. I mean, not a stock really, a theme.
I think IT is the dark horse.
Okay.
So I think no one is talking positive about IT. We have gone out and said that it can surprise. So all the big IT names are clearly something which from here onwards, even if you don't get 100% returns in 12 to 15 months to something like the telecom delivered, you will probably at least see 40% plus returns in the next 12 months, which will anyway be a good outcome for beating the markets.
So one last question, if I may ask, what about the whole Indian consumption story, auto, durables, and the NBFCs funding it really? What's your view on that?
I think NBFCs have gone up a lot. I think the Indian consumption story is evergreen. Okay, it is probably the only story which I see continue to unfold mostly unhindered for the next decade plus. I don't want to pay these kind of valuations. I might as well buy ICICI Bank or maybe even State Bank of India. They will also do the same funding. So NBFCs have had a great run, partly because the PSBs, the public sector banks, were down in the dumps. So I think NBFCs are good. Some of them will still do well, but I would now go with the cheaper financiers. So mostly the banks.
Fair call. Sandeep's Such a pleasure having you. Thanks so much for joining us. This is the first time we're having Sandeep Bhatia on BloombergQuint, but we certainly look forward to having more often on this forum.
Thank you.
Thanks for taking the time, Sandeep. All right, that's an important voice, Sandeep Bhatia of Macquarie, with his thoughts. Before we take that break, just marking the market. We are about 0.25% in the green for the large caps, the broader end of the spectrum. I think on the Nifty 500, it's Hathway Cable which is leading the pack, up 20% in trade. But there are a clutch of others. HFCL is back to winning ways. Pradeep has been talking about it since yesterday. Ujjivan slightly higher in trade, and it's a good move, deservedly so. And I think Pradeep was right. Ramkrishna Forgings, along with Bharat Forge, are those two names which are certainly doing very well, presumably on those Class 8 truck sales from North America. But that's about time that we have right now. We need to slip into a very, very quick break. But when we come back from the break, we'll talk about, a couple of large thematic issues. One is, of course, the big global development, and we get in Mark McFarland to talk about the Fed appointment, future Fed appointment, if you will. And then talk about real estate and whether this revival that we're seeing in the stocks is complemented by revival in sales within Mumbai and within the country as well. Shobhit Agarwal of JLL and Nirajan Hiranandani of the Hiranandani Group would be coming in and talking about that. Stay tuned.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Welcome back. You're watching Indian Open. We've had Jerome Powell being announced as the next head of the U.S. Federal Reserve. The change is coming at a time when the U.S. Central Bank has started unwinding its crisis-era monetary policies. Incidentally, other central banks, the ECB and the Bank of England, have also started a gradual and slow tightening process from here on. What does all of this central bank action mean for the markets? Mark McFarland, chief economist at UBP, is joining us on the show this afternoon. Thanks so much, Mark. Appreciate you taking the time to speak with us. Let me just first get your impressions on Powell's appointment. I think over the last few days, the markets had more or less come to expect that because of various news leaks. So not much of a reaction, really.
That's right. No, I think if you look at currency markets, particularly this morning, you can see that the dollar has strengthened a little bit, suggesting that the concerns about Powell being a dove have been overplayed somewhat. I think Powell essentially is the continuation candidate. He gets away from austere academics, avoids the hawkishness of Taylor, and you get a fairly steady pair of hands from here.
Jerome, sorry, I mean, just wondering whether Jerome Powell is also seen as, a bit, probably not the, the most obvious choice to lead the Fed, as in he's not an economist. That's been pointed out. Some have also pointed out that he's taken a slightly sort of, light stance on financial sector regulation. I don't know whether the market is looking at any of those aspects at all.
I think you're actually correct in that assessment. I think Powell is very much the committee man. He's going to lead a monetary policy committee that will make decisions by consensus. I think under the Yellen administration, you had a much more centralized decision-making process from her on her own. I think also the point you mentioned about financial regulation is a correct one. I think if you tie in Powell with Treasury Secretary Mnuchin and also Trump's aspirations to reduce regulation, I think you can see why Powell has been appointed. It's very much a deregulation environment that Trump wants to follow.
But Mark, tell me, I mean, so that's on the deregulation side. In terms of monetary policy and the monetary policy agenda, I think it's probably fortunate that the appointment has come at a time when there's very little ambiguity on the direction that the Fed is taking. We know their stance on rates, but more importantly, we know their stance on unwind. There are numbers out there. So I guess in that sense, probably less disruptive, even though some would have argued that you could have easily continued with Janet Yellen in the chair.
You could easily have kept Janet Yellen in the chair because she was the one who designed the policy in the first place. They made it explicitly clear on how they were going to start winding down the balance sheet. They gave a very well thought out and easily understood set of guidelines and timetables for wind down. And it was pretty clear that interest rates would take a secondary position in policy terms, and that they would go up very slowly. So I don't think anything has really changed from that perspective. So I think Powell really is not going to change the view that markets have of monetary policy in the US going forward.
Mark, speaking of which, what do you make of sort of this coming together of three of the larger central banks, at least starting the unwind process? But they've all been very, very careful. They've done what they've had to do, but they've sort of, peppered it with dovish comments enough to not, again, disrupt the markets.
Well, I think there's two elements to answer your question. I think the first is concern about the level of inflation and whether those large asset positions on the balance sheets of central banks could be inflationary at some point. And then the second point is that particularly the European Central Bank doesn't want to be discouraging growth by holding on to quantitative easing for too long. And so I think the American Central Bank moving over the course of the last couple of months has to some extent preempted the European Central Bank. And so that's why you've seen the timetable for bond sell-off in the ECB. I think from the perspective of the Bank of England, it's slightly different. I think there was an emergency rate cut in August of 2016 after the Brexit vote that was largely unnecessary. And I think what Carney and co have been doing in the last couple of weeks is readying the market for taking away that emergency rate cut, but not talking about raising interest rates quickly from here.
True, so their scenario is a bit different. What does this mean? So the ECB and the Fed, not the Bank of England so much. What do you think it means for the value of the dollar and the euro, and how that pair trades based on the sort of the trajectories laid out by those two central banks?
I think there's a clear trend towards a slightly stronger dollar. I think the market has probably underpriced the risk of the American central bank from raising interest rates more quickly. Currently, there are two priced in, one in December of this year and one at the end of next year. The likelihood is that you get three over the course of the next 18 months. I think from the European Central Bank's perspective, they are quite reluctant to tighten policy. And as a result, I think the flow moves in the direction of dollars rather than in the direction of euros.
All right, Mark, just one last question. Apart from the currency pair and, of course, the government bond deals, are there any other markets that you're watching closely to see whether some of this unwind starts to impact mortgage markets in the US or anything else that you're watching as indicators of the process of unwind starting to impact the economy or the markets?
Well, I think speaking from Asia Pacific, it's important to recognize that one of the beneficiaries of quantitative easing over the last 7 years has been Asian Pacific markets, including India, where the lowering of interest rates in the US and also the making available of large quantities of new funding has really benefited the economies of Asia Pacific. So I think if you're looking at one set of markets to give you an indication that quantitative easing is having a negative impact, it's looking at the equity markets of the Asia Pacific region. Currently to date, you've seen a little bit of a wobble. I think over the last 2 or 3 weeks, you see markets rethinking the assumptions that were made at the beginning of the year. But generally speaking, the impact of quantitative easing so far has been quite minimal.
McFarland, thank you so much for joining us this morning. Appreciate you giving us your perspective on the changes at the US Federal Reserve and, of course, changes in monetary policy as well. Niraj.
Well, thanks for that, Ira. Moving on to something back home, and 2017 has been a great year for stocks. May not have been the best year for the real estate sector in terms of news flow or sales, because demonetization overhang, all the builders being forced to adapt, or rather asked to adapt to new guidelines laid down under RERA. So did the festive season provide any cheer, or will the government's Housing for All scheme give the much needed boost to the sector, or will it need something else? Joining us to talk about that and a lot more is Shobhit Agarwal, the head of capital markets at JLL India. And Nirajan Hiranandani, one of the biggest builders in the country, will be joining us in just moments from now. But Shobhit, let's kickstart this discussion with a note I think that you released. You released the third quarter residential data for the top 7 metro cities. And while sequentially there could have been an uptick, clearly it is far away from what could be considered as robust residential sales. And this, we talk about metros, we're not only talking about the tier 2, tier 3 cities.
That's right. We did that piece recently, and what we are seeing is after the GST as well as RERA, we're starting to get some really good quality data coming up, and you know, this whole thing on residential, it's not really clear right now on what is the correct trend. I mean, we're getting two different feedbacks from the market. So residential market is not behaving consistently. So good cities, good developers versus top cities, not so good developers are behaving really differently. So we have to still see whether there's a global trend or there's an India trend moving towards it. But clearly right now, I think some projects are really doing well and sales are picking up. So you can see there's a slight green shoot or hockey stick type of a turn, but we are not sure whether it's going to be applicable to the full market. So I think that will probably take some more time. And you're right, therefore, saying it's not robust, but it's turning back.
Okay. Mr. Nirajan Hiranandani joins in this discussion as well. Mr. Hiranandani, good morning and thanks for joining in as well. What's your experience been? I mean, one, for properties that you have, but two, wear the industry captain's hat and tell us whether we can safely say that the organized players are out of the woods, or did this much hyped about festive season fail to live up to the hype?
No, I don't think that it's only the big players who are doing well. There are small players who are well structured are also doing well. There are big players who are doing well, but there are big players who are doing badly. And this is also region-wise. I think the western region and southern region appears to be doing better than the northern region. I think the Western region comeback is really happening. Green shoots, as you talked about, are visible very clearly. We have done well in the last 2 weeks. I think the inquiry levels and closures have been extremely heartening. And I think people are really going for closures faster than they were doing before. So I think 2-3 weeks of very positive flows, which I'm seeing today. And I think, but I believe in the northern region, this thing is not seeable. And the NCR is still under a cloud. But Western region, we have a positive thing. Southern region also, there seems to be a positive thing. But the universality to talk about only big players doing well is not true. I've got some small players who have also done extremely well in terms of a niche market that has happened.
Shobhit, just want to delve a little deeper into your comments. So, I mean, what are you saying? That this is a trend which is not synchronous across either cities, regions, you know, quality of players? Does it at least map one segment of the market, the mid-end, the luxury end, the lower end?
Yeah,
it's very difficult to understand why there'd be such diverse trends right now.
So yeah, I sort of agree, and I'll continue from where Nirajan bhai left, is saying that it's not necessary that good or big developers are doing well and not so big developers are doing badly. So I think what's happening is that it's this whole structural shift in real estate combined with GST is really coming out, and you know the buyers at the moment are slightly confused to say, is this the bottom? Should we buy? Should we not buy? So while the inquiries are very good, conversions are taking time. They're taking longer than we anticipate. And products that are near completion are seeing better sort of conversions rather than you know, good developers versus bad developers. So it's really the state of the project and the pricing where you'll see good residential pickup. So really near the last sort of stages of the project, you are seeing conversions happening. So it's more about the project and the cities than collectively saying this region doesn't work or that region is not working.
And there's been no decline, no notable decline in prices in any of the regions?
No, that's not really correct. I think what is happening is that there is no for sale board there, right? So it's not like a festive season sale, but our developers are sensitive to pricing and discounts are available on the table, I would rather say, rather than saying that I'll announce a 20% sale.
Sticker prices are not down.
Sticker prices are not down, and I'm not even sure whether that helps. It's not important that you put the...
That's not true.
Okay, I mean, we can debate this, and Nirajan bhai, I'm happy to get his opinion saying, can you sell products by just putting down the price, saying I'm 20% down, right? I'm not sure whether that's enough, not from a pricing perspective, but from a conversation perspective, saying sales will pick up.
Okay, so Mr. Hiranandani, come in on this. One, whether the uptick that you mentioned we're seeing in the western and the southern regions is a result of a particular factor, and two, I mean, pricing or otherwise, and two, does this set the stage for some further upsides, or is it very, very difficult to say that right now? Because I mean, when you speak to developers, as you said, the commentary that is coming out is chalk and cheese.
See, the point is very simple. I think the turnaround is definitely happening, and turnaround is only selective. Like in any other industry, certain companies of the same industry would be doing better, others will not be doing as better. So I think the conversation which is now taking place in terms of the whole thing is very simple. Those who have performed in the past and where the products are aligned with the marketplace, and they are willing to do some kind of negotiation, have closed left, right and center. And I think there's a positive trend. I see people coming into the market, buying it for actual use. Also the fact that there is a segment which is coming up much more faster, which is the affordable segment. So new developers, new launches, which I see are more in the affordable segment, though those are not the ones which are selling today in a big number. As far as I'm concerned, I do see that those buildings which are under completion, I've got a zero stock which is remaining. So where we find that we are complete, GST GST is not applicable because we are on a completing basis. People are closing these deals. Of course, they are negotiating. Of course, they are talking about the numbers. But that's not the real issue. The real issue is that there is a vibrancy which has started, which did not exist a couple of months ago. The confusion which was totally there has certainly been mitigated, but it's not happened in all the markets. So I think the turnaround is obviously happened. The question is, will this be sustained? Will it grow up? Will it go faster? What is the kind of price trend that is going to happen? Believe you, I would not be able to tell you how far the GDP is going to grow. What is the pace at which infrastructure is going to grow? These are question marks which I think time will tell. It's very difficult for anybody to predict that kind of a thing. But one thing we are definitely seeing, there is a definite positive trend in sales that has started, and it looks very, very good. So I think there is a positive trend. Where it will reach, I'm not able to predict.
No, that's a fair call. Really difficult to predict there. But if there is one thing that the equity markets have, or the stock performance of select players has shown, is that the companies which have delivered over the last maybe 3 or 4 years are doing much better. I think the last 7 or 8 years, the winners of the previous real estate bull cycle are nowhere present. There's just a certain new set of companies that have come in. My question to you, Mr. Hiranandani, would be, because of RERA, which also is supply deflationary and having a lot more norms to adhere to, the general perception is that large organized players or players which have got their structures in place will survive. A lot of other players will die a natural death. You reckon that will happen?
Well, the market expectations is that at least 25% of the people who are not structured properly, I'm using your word, not structured properly, are really going to die. That is what my belief is. So yes, consolidation is going to take place in the industry. There is no two doubts about it. And we find more and more players who have not delivered and have not been able to deliver will not be able to deliver. So restructuring, reconsolidation, consolidation is going to take place in the industry. Many times I used to see the second generation of real estate developers all wanting to continue in the industry. Now I see next generation of many people who are not structured well saying that, oh, real estate is not a good business and we want to leave the industry. So we do see good and bad players, structured, big or small, I don't agree with. Because many times people say, oh, big player, they're doing very well. That's not true at all. I've seen big players doing very, very, very badly. I've seen small builders really doing extremely well because they are structured well. So you're going to see consolidation, but it's not only for small or big. It's across the board. And also, the certain regions, I see an NCR consolidation definitely taking place. Large number of players have really defaulted in a big way. I don't see that happening in the rest of the country to that extent which is happening. So I think consolidation definitely takes place in the next 6 to 12 to 24 months. How fast will it happen? Again, I'm not able to predict, but it's going to happen for sure.
Shobhit, there's a lot of private equity money that's been coming in. What is the premise on which that private equity money is coming into real estate right now?
So yeah, you're right. We are seeing sort of a wall of capital knocking on the doors. We ourselves have facilitated a few transactions, and what's changing basically is two things. The last time around when real estate was on upcycle, it was the investment bankers or investment banks that were leading this investment thesis. So it was JP Morgan, Goldman Sachs, Morgan Stanleys of the world that were deploying capital. I think what's happened is over a period of time, people have realized that India takes time to sort of deliver.
Because those guys haven't got great exits, at least.
They haven't got great exits, but not necessarily I would blame the developers or the community here, but it's just a slow, it's just a slow sort of a offtake. And so what's happened is correspondingly, the kind of capital that's now coming in is much more patient, it's much more long-term. So we are seeing GICs, QIA, Allianz, etc. saying, yes, we love the country. We know it's going to be a slow sort of a pace development, and they're happy to deploy because they don't have any pressures to take the money back.
What are the kind of projects they're going into? I mean, is this pure residential? Are they preferring commercial? What's going on there?
So unlike the last time around, I mean, I guess last time when the uptake happened or the boom happened, it was very residential led, right? So residential developers didn't really need equity. These projects were self-financed, and so that opportunity wasn't there. I think this time the market is more even. So depending on the type of capital, you're saying, okay, I want to go for core assets, so there's enough built stock that is yielding. So the Blackstones of the world are going for that.
Into built stock.
Into built stock. So this is stable assets. They give you, it's like a
So they're not taking any project risk at all?
They are not taking project risk. But then equally there is enough money that is backing good residential projects, right? And when I'm saying good, it's again, I'm sort of backing Hiranandani, saying it's not necessarily big boys or big projects.
Sure.
It is good projects which make financial sense.
True.
Right? So really it could be in the hands of small developers, but he's very promising. He's structured, he's getting there. So there's enough capital that will chase these kind of projects. And there's opportunity to deploy.
Well, that's always good news,
Yeah.
quite frankly, if that indeed is the course of way. But Shobhit, yeah, sorry, we're just out of time. We'll have to wrap it up here, Shobhit. But thanks so much for your thoughts. Mr. Hiranandani, thanks so much for joining us on this discussion and giving us your thoughts as well. Well, maybe good times in store for real estate companies. The market, if the market's behavior is anything to go by, it certainly is pricing in with the kind of reactions that we've seen in a clutch of these names like Oberoi, Godrej Properties, Marathon NextGen, and a few others. But we are completely out of time on this leg of Indian Open. Very flat for almost all of the key benchmark indices. Telecom remains the top draw. Bhatia, Airtel, Idea, and a few others seem to be doing well. Thanks for joining us on Indian Open. Up next is the F&O Show.